Now back to one of our top stories tonight. Chinese state media have warned that Beijing could retaliate against the U.S. by restricting rare earth sales. 3 different commentaries published this morning hinted that could be the next counterstrike in the trade war.
Rare earths consist of 17 elements used in production in a huge number of industries. And for more on this, we're joined by David Merriman, a rare earth expert and manager of battery and electric vehicles materials at Roskill Consultancy. Thanks, David, for joining us. Firstly, as Glenda mentioned, these editorials from 3 state newspapers today, in fact, a warning of a rare earths threat. Is the writing on the wall, perhaps?
Well, yes. I mean, these articles which have been put out really paint a worrying scenario for the U.S. market in particular. Though this isn't really the first time that rare earths have really been or come to the forefront in terms of this political scenario. It's been well documented the dependence of the US market on Chinese sources of rare earths for quite a period of time, since prior to the price spike that we saw in rare earths in 2011. However, I think this recently is a bit different, particularly because of the language that is being used by the NDRC in China in particular, which seems much more aggressive than has been seen for other commodities and other markets. And I think that's largely to do with China's stranglehold over the rare earths market in particular.
All right, you mentioned that China's a stranglehold, but how important is China to the supply of rare earths, though?
To the supply of rare earths, well, China is the largest producer of rare earths by some way, so it accounts for around 80% of rare earth compound production. That was in 2018. Other major producing nations, Malaysia, Russia, India, account for a mixture of that 20% that's remaining. But really, to get an idea of the dominance of China on the rare earths market, although it accounts for 80% of that supply, it also accounts for 70% of rare earths consumption globally as well. Now, this control over both the supply side and the demand side of the market gives China quite a strong control over rare earth pricing, which has been used historically to control the global market itself, either by incentivizing or disincentivizing the development of projects outside of China.
And how will this affect then the U.S. if China restricts exports, and how will it affect sort of the rest of the world as well?
So really, if China were to essentially cut off rare earth exports directly to the USA, there's likely to be some pricing reaction there. That will largely be as consumers scramble to find other alternative sources of rare earths. It's likely that there will be a lot more trading activity of material moving through major trading bases out of China and then into the US market. But there's likely to be an added value because of that trading activity. Other activities that we could see, as we've seen price increases historically, there's been a lot of development of alternative technologies to rare earth bearing technologies. So back in 2011, we saw the development of FCC catalyst materials in the USA, which had reduced or no rare earth usage. We saw the rapid development of induction motor technologies by companies such as Tesla because of uncertainties into that rare earth supply chain. So there could be a move back towards those replacement technologies for rare earth applications. However, there are efficiency well, there's a loss of efficiency in using some of those products that will have to be met by other applications or other technologies.
All right, thanks very much, David, for your time this evening. David Merriman, a rare earth expert at Roskill Consultancy.